How is it going, everyone? Welcome to the trade breakdown video. In this video, I will break down two of my trades. The first one I took on the ES on Tuesday, and the second one on the EURUSD, which I will review later. So starting with our first trade breakdown, on the left side, I have the NQ daily chart, and on the right side, I have the ES daily chart. So starting with the daily chart, first thing we have to identify the phase of price delivery. We were in an expansion phase. Then on Monday, we retraced into this imbalance, a fair value gap. And on the ES, we took the previous day high and closed inside the range that cannot do formation, the MMXM's next day model. And the second thing, we have to read the order flow. So obviously we are in a bearish trend, in a bearish order flow. Closure below the up-close candles, expansion to the downside. Now retracement into internal range liquidity pool, fair value gap. Now closing below the up-close candles once again, both on the chart. So that leaves us with a bearish bias for the Tuesday. So from here onward, I would drop down to the 4-hour chart. Here on the 4-hour chart, as you can see, reading the order flow once again, we close below the up close candle, a change in state of delivery. And from the weekly opening, we created the wake up the weekly candle first, close below the up close candle, a change in the state of delivery. So that leaves us with a Tuesday continuation and a bearish week. Going into the Tuesday 18 opening, we created the wake up the daily candle first, and to this fair value gap, internal range liquidity, both on the charts. And also if we use the 4-hour profiling, which I have a video guide about, 22 candle reversed, we had an expansion candle that indicates that the 6M will also be an expansion candle using the MXM next day model. The candle 2 closure, candle 3rd was open high low close candle, and the drawn liquidity is right here, so the candle 4th will also be an expansion candle. And also marking out my 6M opening right here. So if I'm trading the 3rd candle, I can use the 4-hour to M15 models, but in this case the 6M candle already started expansion, so I dropped down to the 1-hour chart. So dropping down to the 1-hour chart, you can see the 4-hour candles on the right side. The 6 a.m. created a small wick and then started expanding to the downside. And once and more, there are 4 1-hour candles inside a single 4-hour candle. So using that logic, the 9M candle retraced into this fair value gap, this imbalance. In this case, the ES was bearish because you can see it from the wick size of the 9M candle. The 9M candle opened up and then retraced deep into that fair value gap. Compared to the NQ, 9M candle on the ES has a small wick, which leaves us with a large expansion. So using that logic, and also there was an SMT divergence on the 30-minute chart. This is our SMT divergence. The NQ is taking this 730 high, and the ES is not taking that high. And also here is our another SMT divergence at this high, the 30-minute chart. Usually I'm using the 1-hour SMT divergence, but in this case I used the 30-minute because of the wick size. It was obvious. Then from here I dropped down to the 5-minute chart to align the market maker model. Now here on the 5-minute chart, you can see it right here. The 930 candle manipulated this high once again, and on the ES we were bearish, and we created that bearish SMT divergence. And using the intra candle change in the state of delivery, we had a closure below the up close candles and to the SMT divergence, which was right here, the 30-minute SMT. And in hourly fair value gave a point of interest, so we closed below that. What I did, I waited for a continuation order block because I wasn't watching the change in state of delivery entry. So here we tapped into the change in the state of delivery. Now if we are closing below this up close candles and to another order block, that would be our propulsion block. So on the next candle we closed below this candle. I put my limit order here, stop above the propulsion block high, and targeted 2R. So on the next candle, I tagged in and the price expanded to the downside, completing the 2R objective. This is the second trade breakdown which I took on the EURUSD, starting with the daily chart. Using the Fed as a price delivery, we had a consolidation followed by manipulation and then a V-shaped recovery, a reversal. and then we are in expansion phase. And now using the order flow lesson, we are closing below the down close candles, a consolidation, manipulation into expansion. And also we are closing below the series of down close candles, which are indicating the bullish order flow. And I'm using the DXY, the dollar index, is part of the inverse bias because bearish on the dollar, then bullish on the Euro USD, using the 0.5 of the previous candle's range. If the next day is respecting the upper quadrant, it means it is going to be an expansion candle. Now from here onward, I will drop down to the 4-hour chart. Here on the 4-hour chart, using the order flow lesson once again, we had a closure below the down close candles, expansion, then retracement, followed by another expansion. Now with the 21 candle, we retrace into this fair value gap, both on the dollar index and the Euro USD. 21 candle reversal, that means the 1 AM candle expansion, and also the 5 AM candle will be an expansion candle. So I'm positioning myself within the 5 AM candle, open, low, high, close, daily candle. Now from here, I would drop down to the 1-hour chart. So here on the 1-hour chart, I don't really see any SMT divergence with the dollar index. So I pull up the GBP USD chart. With the GBP USD on this specific low, we had an SMT divergence. GBP USD is taking this low and tapping into the fair value gap on the hourly chart, while the Euro USD is bullish and creating a bullish SMT divergence. And also we have another SMT at this swing point formation. Because I'm using swing points, I would also utilize this SMT divergence. The GBP USD is taking the previous candle's low and the Euro USD is creating that SMT divergence. Now I have all the confluences aligning and we are inside the hourly fair value gap. Now I will drop down to the 5-minute chart. Now on the 5-minute chart, the Forex price action is not always good, but we have a change in a state of delivery. Then we had a continuation order block. These down close candles are respecting the 50% of the change in state of delivery and forming a propulsion block. So I put my limit order here. I tagged in my stop loss below the propulsion block low and I targeted 2.5 hour. The next candle reached my profit objective. So this is the model I trade, and hopefully the model video will be released on Sunday. This is the model I'm using on all the asset classes, whether these are futures or Forex. Thank you guys for watching, and let me know in the comment section if you are liking these execution videos. Make sure to subscribe to the channel and like the video, and see you in the next video.